All right, earnings season is finally underway, and we got our first batch of earnings last week, but this week we'll get into the bulk of the earnings season. Last week was mostly financial companies. This week we get some bigger companies in the consumer sector. In this video, I'm going to cover Netflix's latest earnings results, which were absolutely phenomenal. The stock is up after hours following these excellent results. I'll go through them in more detail. I'm also going to discuss 3M, which was the opposite, a disappointing quarter for 3M, namely because of the outlook for 2024. The current quarter's results was better than expected for 3M, but the forecast they gave for 2024 disappointed investors. So I'll go through that. I'll share that with you also. And I'll update my recommendations on these two stocks. I had both of these stocks rated as a buy coming into these earnings results. In fact, Netflix was one of my top stocks to buy for 2024. I made that video early in January. 3M I had recently downgraded. 3M was on my list of top stocks to buy in 2023. For 2024, I downgraded 3M. Still a buy, but not in my list of top stocks to buy. So stay tuned and I'll update those recommendations as well in this video. So let's jump into the earnings.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, for Netflix, the big news was that it's accelerating growth again. Earnings per share, revenue accelerated to 12% growth, up from 6% growth in 2022. They grew their fiscal year operating profit margin back above 20% to 21%. That was up from 18% in 2022, and that was ahead of their 20% operating profit margin target. Those are really good operating profit margin. Netflix has demonstrated excellent growth in operating profitability and operating profit margin, while at the same time growing their top line and growing subscribers. It was excellent execution in 2023 from Netflix. Personally, I appreciated Netflix strategy with competition. As you might be aware, 2019, 2020, 2021, Netflix faced a myriad of new competitors into the streaming industry. But I think Netflix handled that competition masterfully well. I think it did an excellent job. It didn't panic. It didn't cut prices. It didn't increase its competitive fierceness. In fact, it raised prices amid those competitive forces. It increased prices. It signaled to rivals that it will continue to raise prices. It will cut password sharing. All the steps it took as the leader of the industry really propelled it forward. I like to compare Netflix with Tesla because Tesla faced a similar onslaught of competition from new EV companies jumping into an industry it was essentially the pioneer of. But Netflix took the opposite strategy of Tesla. Tesla is cutting prices, increasing supply. Netflix is raising prices, decreasing supply, focusing on profit margin. So I like the way Netflix has dealt with it. That's why I've recommended Netflix as one of my top stocks to buy in 2024. And in these earnings results, you're going to see the benefit of that strategy, the benefit of not competing to the race to the bottom by cutting prices and hurting the industry overall. To make matters even better, Netflix saying that they believe there's plenty of room for growth ahead as streaming expands and their North Star remains to thrill members with their entertainment. And that's something that they've proven that they can produce content that customers are willing to pay for, that keeps customers engaged, and they can do that at a low enough price that delivers excellent profitability. That was a big question mark like 5 years ago with Netflix. Can they produce their own content or will they always be reliant on partners to license content from? Well, in these previous 5 years, they've really proven that they can create engaging content and produce that content at low enough prices to generate strong profitability and cash flow. So Netflix revenue growth in the fourth quarter, more specifically, increased 12.5%, Operating income almost tripled to 1.5 billion, up from 550 million in the previous year's fourth quarter. Memberships increased by over 12 million to 260 million, up from 247 million. Year-over-year growth in memberships accelerating to 12.8%. But look at this. Membership growth from 4% to 4.9 to 8 to 10.8 to 12.8. Not only are they adding millions of customers every quarter, but that rate of growth is accelerating. And you've heard me talk about the importance of that second derivative, the increase in the rate of growth. Netflix demonstrating that in their revenue growth and in their streaming subscriber growth, which are vital metrics for Netflix investors. And then free cash flow more than increasing by 5x, or roughly 5x, from 332 million to 1.58 billion. So an excellent quarter from Netflix, and I'm keeping Netflix in my list of top stocks to buy. I really like its potential. I like where they're going. I like the strategy. I like the industry. I like the decreasing competition. Everything is where I like it, and the valuation is not too expensive even after this increase after these earnings results. Let's move on to 3M, which had an opposite type of a quarter. For the full year 2023, also not very good. And the big story with them was the settlements, lawsuits, right? So they had the Combat Arms earplug settlement that cost the company $5.94 per share for 2023. And then they had the public water system settlement, which was even worse, which cost the company $14.45 per share. The pre-tax charges were 4.3 billion and 10.5 billion respectively for these two settlements. So that's the big item. That's what's hurting 3M, and they need to get beyond this so that they can really demonstrate to shareholders that they're past and they can start to return to growth and return to their business. And I've been talking about these impacts on their earnings per share, but these are not yet impacting their cash flow from operations. And even when they do, I suspect that they'll make an arrangement where they won't have to pay all of that cash up front. They can make a payment arrangement and pay off those settlements over time. You can see operating cash flow of 6.7 billion was up 19% year over year. Adjusted cash flow of 6.3 billion was up 30% year over year. But the bad news was the 2024 outlook. The company forecasting total sales growth in the range of 0.25% to 2.25%, reflecting organic sales growth of flat to up 2%. So very mild revenue growth for 3M in 2024 expected. Adjusted earnings per share in the range of $9.35 to $9.75. But cash flow is expected to remain strong. Operating cash flow of a midpoint of 6.8 billion. That would be a slight increase of the 6.7 billion in 2023. Although management said that this outlook continues to reflect the healthcare business as part of the company, but does not reflect the potential impact of the funding amounts due under the PWS settlement and CAE settlement, absent the receipt of, they're trying to spin off the healthcare segment, and that would raise cash. So still a lot of uncertainty around 3M regarding these settlements, and the final conclusion of these settlements still not resolved, and that big question mark, that big overhang remains over 3M stock, and the stock was down nearly double digits after these earnings were released. However, I still think 3M stock is a buy. Now, I have recently downgraded 3M stock from one of my top stocks to buy to just a buy. It's not one of my stronger buys anymore. The uncertainty regarding the legal disputes is a major factor, but also the relatively benign sales growth continues for 3M, and I think it's taking a lot of management's time and focus and energy dealing with these settlements and not focusing on the business, growing the business, improving profitability. Still, I think the valuation is compelling. Relatively speaking, 3M on a forward price to earnings or price to free cash flow valuation basis remains compelling. So For that reason, I'm keeping the stock rated as a buy, although it's not near my list of top stocks to buy. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.